Hello, all of you. I hope you are doing good. So today we are going to cover the amendment which comes in Accounting Standard 22. As we know that Accounting Standard 22 deals with the income tax, how to do the accounting of income tax. Okay. So this amendment comes in Accounting Standard 22 because of a rule we call it pillar to minimum tax. So I will discuss with you what is this pillar to the minimum tax. What happens? So many people, students send me a message. The amendment comes which mentioned in the RTP, but they are not able to understand from there because the technical language is there. So I simplify those amendments here, very simple amendments. You don't have to write anything. You can find it on this PDF, this amendment PDF that here in the Telegram channel I will share there. You just have to listen me carefully. Okay, you just have to listen me carefully. Okay. Now what it says that here now, what is this pillar to that? First of all, that here there is an OECD. It's the Organization for Economic Cooperation and Development, which introduced a minimum 15% global minimum tax for the large multinational company. So what happened? They say in some country, first of all, that now is the rate of tax is less than 15%. Like in Dubai, the rate of tax is 9% there only. And but it says the multinational company, a large multinational company should have to pay minimum how much? 15% that they have to pay. So what about the remaining the 6%? Because the rate of tax in Dubai is 9% and they are saying the minimum it should be 15%. So what about the 6% for the large multinational companies that here? Okay. So what happened? This is they have to pay that, but not applicable to all the companies in Dubai. This is a large, they have separate rules for what is large multinational company as per them. So it's a separate rule that here. But they say minimum 15% should be paid by those large multinational companies. So now suppose if they are paying their 9%, they have to pay the remaining 6%. So why the accounting and 22 is going to be affected because of that? Because AS22 deals with the accounting treatment of the income tax that year. Okay. So I will tell you, we might have some companies that are outside the UAE or India, or even that here outside India we have, we may have some subsidiary company, and the rule may come that here in India as well that here now. So I will discuss with you, don't worry for that. But what they have done, this Accounting Standard 22 says that how to do the account and disclose this new tax. So what happened here? They have done the changes here, amendment in the para 2A and the para 32 to 32D. It means para 32A, 32B, 32C, 32D, and para 35. So these are the amendment. These are the para in which these amendments are there. So they have in a para 2A, 32A, 32B, 32C, and 32D, and para 35. Okay, now please understand one by one. What it says by these the para 2A, these say these amendments applies to taxes arising from the pillar 2 rules, including the qualified domestic minimum top-up tax and the global minimum tax under OECD pillar 2 model. These are called the pillar 2 income tax. Let me give a background what is. Okay, I'm taking an example of Dubai to make it simple only. Okay, that is the intention here only. Suppose if I say that now here, the rate of tax there is 9%, but these rules say 15%. Okay, OECD rules say 15%. So for the minimum 6%, if the Dubai government collecting that 6%, so for them, it is going to call qualified domestic minimum top up. If they are not collecting, and suppose that company which is in Dubai, which is a subsidiary company, holding company is in, suppose, let's say in the Chennai that here. So if Dubai government is not collecting on those companies, if Indian government is collecting, because they are not collecting, then the Indian government has the right. If they are collecting that now, so that for the India, that is the global minimum tax that is. Okay. So whatever is that, whether the domestic government or globally we are collecting from some other country that year, we have a subsidiary, we are collecting the Indian government. So that is a global minimum tax, or whatever these qualified domestic, whatever is that here. If because of these difference is that here, there is a minimum tax should be, if country is collecting below that here, whoever is collecting is that here, we are going to call it pillar 2 taxes. What is important from the accounting point of view? AS22 clearly says that here no deferred tax asset and liability should be created on these. Okay, so on these pillar 2 taxes, this is the key that you have to remember, that now no deferred tax asset and no deferred tax liability should be recognized for pillar 2 taxes. This is a key accounting rule. Remember this. This is a main amendment that here. We are not going to create a deferred tax asset and deferred tax liability on this. Okay. Let's talk about the presentation and disclosure. Para from 32A, B, C, D talks about the presentation. So 32A says that now state that exemption is applied. The enterprise must disclose that it did not recognize the deferred tax. Why we did not recognize the deferred tax on pillar 2 on pillar 2 taxes only. Okay, on those difference I'm talking about, the 6%, 15%, minus 9%, that is the rate of tax in Dubai. So we should not recognize the deferred tax asset and liability. We know that. But at the same time, we have to disclose that we have not recognized deferred tax asset and liability because AS22 tell us that. We have to mention them. In the para 32B say that we have to disclose separately, show separately how much is the current tax expense or current tax income arising from the pillar 2. Now understand. Obviously, if you're paying the taxes, we have to record in the P&L account, but we have to show them what they say separately, that how much tax we are paying from the pillar 2. So users of financial statement, it will be easy for the users of financial statement what actually we are, how much tax we are paying under pillar 2. But what is the key point? Obviously, we're paying the taxes, we have to account that here. What is the key rule that is? But there is no deferred tax liability that we have to create on that. The para 32 says that when the law is enacted but not yet what effective, it means law is declared but which is going to be applicable for example for the coming financial year. So what is the effective date? I will come to that. But they say if pillar 2 is announced but not yet applicable, disclose any reasonable known or reasonable estimable information help user understand the company's exposure to pillar 2. So if we suppose declared but which is not applicable, we have to mention them how it is going to affect them in future so that the users of financial statement can make a proper call. Para 32D says that here to disclose the two information, qualitative and the quantitative. Qualitative, they say how the company is affected by the pillar 2 tax and the countries where the company may face top-up tax. For example, we have a holding company in Chennai, we have a subsidiary in Dubai. So how in the countries we are going to face the top-up tax in our example like the Dubai that. Okay. Quantitative information, they say the approx percentage of profit that here likely to be taxed under the pillar. How much is going to be taxed like? For example, 9%, suppose we are paying that in Dubai, they are paying, and the 15% is 6% we have to pay under the pillar to tax that. Okay, that we have to mention. Impact that here now, impact on effective tax rate. So they say we have to show how it is going to impact on effective tax rate. How we calculate effective tax rate? Total tax divided by profit before tax, multiply by that. So how it is going to affect because of the pillar 2 tax. And they say if we are not able to reasonably estimate, we have to mention that we are not in a position to reasonably estimate the amount. This amendment also give an example that now here. The amendment suggests example a company may disclose how pillar 2 applies to its countries, percentage of profit that might be subject to pillar 2 tax that year, how much we are going to pay under the pillar 2 tax, and how its effective tax rate would have changed if the rules were enforced that year. So what is going to be affected the tax rate as well. Now, what is important from your examination point of view, from advanced accounting paper point of view, note deferred tax asset and liability. They may give you a question in MCQ, or they may give you a question, even they may ask you the question in AS22. But remember, they just ignore whenever it's come the pillar 2 tax that year. No deferred tax asset and liability on that. And disclosure only we have to do. I already discussed with you what we have to disclose, but you know that even the disclosure is exempted. No need to even disclose only to an entity which is a non-corporate entity. Okay. And they are coming under level 2, 3 or the 4. We don't call it now level 2, 3, 4 because MSME and other than MSC. But remember that in RTP they use the word MSME and MSME and the level 2, 3, 4 as well. That is. So to explain you that here, remember non-corporate entities, level 2, 3, 4, no need to even disclose it. Okay. Now, what is the effective? This remember, this is also important. Now, this no need to even to disclose it. Now, what is the effective that here now? If para 2 and 32A is going to be effective immediately. Para 32B to 32D is going to be applicable from 1st of April 2024, and no disclosure is required in interim report before 31st of March 25. So all dates already gone, 31st March 21, all that. So it is going to be applicable. But remember the points. No deferred taxes and liability. Okay, but we are paying these. If I am paying the taxes, obviously we are going to account them. We'll show them separately. Okay, and no need to even disclose that here. Here certain point they have to mention that from 32A to 32D to disclose, not even to disclose for the non-corporate entity level 2, 3, 4. Okay. From the examination point of view, remember applies quick revision that now applies to pillar 2 global the minimum tax. No deferred tax asset liabilities for pillar 2. Disclose current tax separately. Now give the qualitative and the quantitative exposure details. MSME the exam that I mentioned with you, and effective date is what 1st of April 2024. Okay, so remember no deferred tax asset and liability, and obviously if you're paying the tax, we will account them, we'll show them separately so that the users of financial statement can understand properly. Okay, and we have to mention so many points that they have tell us to disclose from 32A to D. This disclosure even not required if the non corporate entities that here level 2, 3, 4 if they're coming there. Okay, so this all about the amendment which comes in accounting standard 22. Very simple is that. Okay, so don't worry, no need to write anything that here. I will share these notes in Telegram chat. You can take it this from there. And if you want to say me anything, you can write it down in comment section. Okay, that is for today. Take care all of you. Bye bye.